G'day investors, welcome back to another share update, and today we're looking at Caterpillar. Now there's a bearish outlook for Caterpillar. This is a request for someone. I'm just going to review a bit of a fundamental outlook, but also the chart analysis on where Caterpillar's heading. Now we do more of these on the weekly scan of bullish shares from the Patreon page, so reference that at the end of the video. There's a link in the description below. Before we go any further, make sure you hit that like and subscribe button. So getting stuck straight into it. In terms of Caterpillar's outlook, their insider trading in the past 24 months, insiders have purchased 1,150 shares, totaling approximately $392,000. During the same period, insiders sold 165,000 shares worth about $54.2 million. Notably, on February 18 this year, Group President Jason Kaiser sold 2,400 shares for $860,000. In terms of China sales performance in 2023, Caterpillar's global sales reached a record $67 billion, a record, and that's a 13% increase year over year. However, the company has faced challenges in China, with the CEO in early 2023 indicating that demand could fall below 2022 levels. Additionally, in the third quarter of 2024, the CEO anticipated muted demand in China. In terms of other regional sales performance in North America in 2023, this region contributed approximately $34.6 billion, accounting for about 52% of Caterpillar's total sales. Across Asia Pacific, sales in the region were $12.1 billion in 2023. In quarter 4 2024, machines retail sales in Asia Pacific decreased by 8%, with overall global machine sales declining by 3%. Across Europe, Africa, Middle East, that's the AMI region, generated $13.6 billion in sales in 2023, and Latin America, the region saw sales of $6.6 billion in 2023. In terms of stock overview, rewards, earnings are forecast to grow 3.3% per year. Earnings have grown 22% per year over the past 5 years, and it pays a reliable dividend of 1.6%, trading at good value compared to peers in the industry. In terms of risks, has a high level of debt and significant insider selling over the past 3 months. So as always, look at the long-term trends first. So at the monthly, the weekly, and the daily. Now it depends on what time frame you're trading or buying shares or stocks. If you're trading on the daily, for example, you always look at the higher time frame, like the weekly. Or if you're trading on the very long term on the weekly, we look at the monthly as well. That's why I've got the different time frames. And these indicators for those new to the channel are available in the description below to reference that video to learn how to draw these on your own charting software. But you can see here we've got the CCI 150 on the bottom here is actually declining CCI. It's lower highs, and it's actually broken down below the moving average. And that's a bearish outlook on the monthly. Even though the price is relatively high, we always look at this divergence back here, and we measure it against the higher highs on the price. And we draw a Fibonacci level. So going back from that high to that recent low before the divergence started. And at the minimum, it hits the 23-38% retrace level. And that's where it's currently sitting. More often than not, it can bounce out of that. So it could have a bit of an upswing. But at the moment, the CCI is showing a bearish momentum. So we might see further declines in the meantime. This divergence, it hits more than 90% of the time. Sometimes it just bounces off it. Other times it actually falls a lot further than 100% retrace. So that 61% is really the key area to look out for in terms of Fibonacci retrace. If it falls much below that, we're going to see a lot further declines in the share price. So at the moment, longer term, it's bearish momentum. On the weekly, again, you can see there's different divergence, and these are independent from different time frames. And more recently, we've got this bearish divergence here, lower highs on the CCI versus higher highs on the price, and I've drawn a target area there, and that's at 23-38% retrace level. Again, these are all independent from the different time frames. So the weekly is also bearish. The CCI is dropping off. On the daily, it was fluctuating in this minor support and resistance range for some time, and it's still in that range, and it's currently approaching this minor support at 346.87. So, and again, notice as well the price or the CCI is still declining below the moving averages. So again, further declines are likely. Now, to get an understanding, even if you're trading and buying on the daily, it's always good to look at the intraday time frame, like the 1 hour, which I regularly look at, to see if there's any micro movement potentially allowing this to bounce off the daily. So what we do now is we go to the 1 hour chart here. This is the daily chart as a reference. So again, we predominantly take long trades only when the higher time frame is moving in that direction. So for example, if you're trading on the hourly on any instrument, including here Caterpillar, you would have gone long during that period when the daily was also bullish. So you would have got in when the CCI broke above the moving average range down there, and the price likewise broke above it there, and you would have hung into that position on the, if you're trading on the hourly in this case, but the same principle applies to any time frame, and you would have closed it out when the CCI broke into that moving average range. So that little gain on the 1 hour chart got in there, and you would have got out at that little point when it broke into the CCI, and that wasn't that candle. So that would return 4.1% in 20 hours of trade. Now since then it's actually risen again, got in again pretty much the next hour, broke out of that CCI range, and you would have got out again at that little point there. And then again, this is of course if you're trading on the hourly, you do the same principle on the larger time frames, and you would have got out in that point there. Now notice it didn't tell you to get out at the peak there, so you would have got on the hourly basis, you would have got 3 little trades, and you apply the same principle. Had this been a daily and that was a weekly, it would apply the same principle. But notice here as well with the divergence, we look at any micro divergence. Back here for instance we had higher lows, and here we had lower lows, and that was an indication that the price could bounce. Now in terms of a retrace, we take a Fibonacci from that low, we take it back to the significant high. That would have been that point there, and you can see there it bounced at the minimum. Let me just get rid of this measurement tool. You can see there it bounced at the minimum to that level, and then it went right through it and went right through the 61%. In this case it went right up to the 100% retrace, and then it fell back down again. Now notice as well here we had a declining CCI versus higher highs on the price, and again you would not have don't get greedy. Just as soon as you see the CCI break into the moving average range, you get out of the trade like you would have got out of it there, let it go. The CCI started falling off, so the price kept rising but the CCI kept falling off, and that was your first warning. In this case the price retraced back to the downside. So if I drew that would have been the same level of Fibonacci from that high down to that low. You can see there the Fibonacci retrace went from 23 to 38%, broke right through it, right below the 61%, and in this case it's coming right down to the 100% retrace level. Notice again also we've got another bullish divergence, higher lows on the CCI versus slightly lower lows on the price. Now I'm not telling you it's going to go to 100% retrace. I'm telling you at the very least more than 90% of the time it goes, assuming it keeps rising from there. Take it back to that level. The minimum retrace level is going to be that 38% level. That's assuming the price keeps rising and the CCI keeps rising as well. For this to invalidate, we need to see the CCI drop below that point there, in which case that would have invalidated the divergence. So at the moment, on the micro level at least, we're seeing a bit of a slight increase. Again, just remember that this could be a slight increase, a bit of a bounce somewhere in this area, at the very minimum this area. On a daily, that'll translate to possibly touching the moving average range like it did back here. Then it could actually continue into a downtrend. So if you're anticipating on buying Caterpillar in the long term, I would suggest wait until the larger time frames have shifted. In other words, if you're buying on a daily and the weekly, wait for the monthly at least to break higher on the CCI levels to be more confident. I'd like to see that break higher than that point at least, and that would have invalidated that divergence. That divergence has already been hit. So if that starts rising from there, especially if it rises higher than that, we want to see the CCI normally. The CCI tracks in the same peaks and troughs as the price. That's what you normally want to see with the exception of these divergence. So again, if you're buying for the long term, I'd wait for this monthly and the weekly to break higher, and then look at buying it based on those patterns.
To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.